Okay, guys, so like I said, today's topic is pre-market charts. What are the benefits? What are the drawbacks? Early charts. Now, before I get into this, and like I said, we're going to take a look at some charts from today's trading as well. But one of the things you have to understand is a lot of people are scared of the open, right? A lot of people are scared of the open. That first 5 to 15 minutes a day, 9:35 to 9:45, that area. Now, why are they scared of the open? Well, that's easy. That's simple. They're scared of the open because it's whippy, it's volatile, it's spready, and a lot of times it can be illiquid. So some people don't even think about using pre-market charts, which I think is a massive mistake. All right, it's a huge mistake. Now, when you think about pre-market charts, guys, almost every stock has some type of volume in the morning before the market opens, right? Even if it's only 100 shares or 20 shares, we're not interested. I want to be clear. We're not interested in stocks with no volume off the open. So if you're looking at a pre-market chart, you need to also not only look at the gap, but look at the volume. Make sure it's doing really handsome and healthy pre-market volume. Now you're like, well, that's a very arbitrary term, isn't it? Well, it is an arbitrary term, okay? But trading can be arbitrary. So what I'm trying to get at, guys, is if you have a stock, for example, I'll use a hypothetical, and you know what, we'll use SGH as an example later. If you have a stock that normally does 500,000 shares per day for the entire trading day, 6 hours of trading, and it does 500,000 shares. And in the pre-market today, it's doing 100,000 shares. What does that tell you? Well, it tells you that that stock has an unusual level of interest today, right? Do I know why? I don't care why. I don't care if it's because the CEO stepped down. I don't care if it's because they had great earnings. I don't care if it's because Jim Cramer mentioned it on his show. I don't care. You only care about the what. Why is less important than what in trading. Okay, now there are times that that's not true, like cash buyouts, etc., and so forth. Point I'm making simply, though, is that if a stock normally does 500,000 shares a day, and today it's got 100,000 in the pre-market, there's serious interest. And believe me, it's not mom and pop interest, it's institutional interest. So let's talk a little bit about the benefits of pre-market charts. Then I want to talk about a few charts from today, specifically. So the benefits, guys, you help traders stay out of stocks that will likely pull back at the open. And you're like, well, how in the hell would you know that? I'm going to show you in just a couple minutes, right? If a stock's down like 8 bars in a row off the open and you want to short it, it's like, well, wait a second. It just dropped 8 bars in a row. Why would you want to short that stock? Okay? It helps traders, and this is how I use it a lot every day. It helps traders get into stocks earlier than normal, right? Earlier than normal. Okay, you can get into a stock at 9:30, maybe even in the pre-market. Okay, and by getting in earlier, we can better take advantage of the entire move, not just the extended move in the first 5 minutes. Right? A lot of stocks rip off the open, and you kind of go, "I wish I got that." Okay, so I treat pre-market charts like regular charts, guys. Absolutely like regular charts when the volume is significant. By significant, I mean 3, 4, 5 times average pre-market volume. So if you treat pre-market charts like regular charts, if it's an extended move, wait for a pullback or a consolidation. We'll talk in just a minute about a particular stock from today. And if it's a non-extended move, enter immediately, assuming it's got a nice daily and a nice pre-market. But, you still have to trade patterns. You still have to trade patterns, right? You can't just trade it randomly because, oh, it looks good. You have to have a pattern in the pre-market, okay? All right, so it says right here at the bottom, sometimes traders get enamored by a particular gap and they want to enter immediately at all costs. However, this can be a dangerous game if you haven't considered the pre-market chart. Let's take a look, okay? All right, so I use that word a lot, don't I? So, all right. Today, there are 3 charts I want to look at, okay? And one volume-wise I want to look at just for volume purposes. This SGH today, and let's go to the daily chart on this. SGH, as you can see here, on an average day, does 3 to 700,000 shares, right? On an average day, this stock does 3 to 700,000 shares. But notice 1, 2, 3, 4, 5 times in the last 7 months, this stock has done well above average volume. I want you to notice something on those days. Usually, they are significant gaps like today and like this gap over here. And they are usually wide range bars. See how wide this bar is right here? That's an extremely high volume day. It did over 4 million shares on this day, and normally it does what? 350,000? Okay, right there. 500,000? So you look at that and you go, wow. So this morning, pre-market, SGH was doing 161,000 shares in the pre-market. 161,000 shares in the pre-market. Somebody in the room asked, isn't this stock kind of light? And I said, no, it's doing 161,000 in pre-market. This is going to significantly exceed its normal volume. Well, what's it up to? We're not even at the end of the day, 4.5 million shares. There's still plenty of time to go today. See what I'm saying? And then they do excessive volume in the pre-market. It's not just mom and pop volume. It's institutional volume, which means you want to watch this stock. Now, let me show you one more thing. What did we do? I wanted to short this stock at $24 today, right? I showed this to you guys earlier. Orders rejected. Right down at the bottom, SGH, I tried to short this stock. It was on an uptick rule, all right? The point I'm simply making here, okay, move this up, pull this back down, is that these are stocks that you want to keep on your list because they're well above average. Pre-market volume matters, okay? Pre-market volume matters, okay? So the ones I wanted to look at, though, were MU. Let's take a look at the daily. All right, there we go. Sorry, guys, this is freezing for a second here. There we go. Okay, so today, guys, MU did what? MU gapped over a red bar from yesterday. MU gapped over a red bar. So a decent gap today. Was it the world's best gap? No. I didn't actually see this today. All right, but it gapped over this area. So a decent gap. If you saw it, something you might want to watch. But here's the key. Take a look at this. This is the 5-minute chart. Take a look at it. What do you see here? Answer, not much. What do you see here? Not much, right? This thing just hit and ran and ripped off the open. Pulls back. Maybe you get an entry at 35.50. It bounces shallow, stops you out, and goes here. This is a much tougher entry. So you're sitting here going, so what, Jared? This thing gapped over a red bar and it ripped off the open. What's the topic today? Oh, that's right, pre-market charts. You want to see something? Watch this. That ripped off the open, no entry, right? No entry. 24-hour, which is pre-market charts. Now what? Right there. Right there at 35.12, it has a consolidation. You want to see something prettier? Now, how about that? There's your 15-minute. There's your pivot. Chop, chop. Wide range bar takes out the pivot, gets a little jiggy, and then consolidates. This is all pre-market. All pre-market. Let's go back. Let's go to a 2-minute. There it is right there. Okay? I like the 5-minute, maybe the best. Okay? But you look in here, guys. Look right there. It's all pre-market. It's before the market opens. But the volume was tremendous on this thing. This is pre-market volume, and this thing did over 1 million shares this morning. Over 1 million shares this morning. So what would you buy it? you would simply buy it over the pre-market high at 35.12 right there. Right there. Buy it over 35.12. Right here. Put your stop under there, which is 34.90. And personally, I would give it slightly more room. Slightly more room. Why? Because it's early in the day, 20-cent stop. This thing has at least $1.20 in it. So I would probably give it a 25-cent stop, right? I'd probably just give it a little tiny bit of extra room, maybe 85 by 0.10, 25, 27, right? Rip. Now, let me take it off again. I want you to do it slow. That's your entry as soon as the market opens. Yeah, but you know, Andreas, we still need $2 more on that. So $2.50 actually. We'll see. I'm not saying it won't get there. We'll see. All right, so you'd get in at 35.10, 35.12 as soon as the market opens. Put your stop there. Guys, look at the volume spike in the first bar of the market. Open, first bar of the open. 3.7 million shares. Now, let's take the pre-market off. Let's take it off. There's no entry. There's just no entry on it. Right? Maybe I'll check a 2-minute. Let's take a look. Maybe. Give it a second. It's really, really slow right now. Okay. 2-minute, you could have argued with that shakeout. You could have argued to get in, right? Right above this area, okay? At 35.30. All right? You would have had a wider stop, but that's not a bad play, okay? But if you're looking at the 5-minute, there is no entry. If you look at the 2-minute, maybe you have an opportunity here. Pre-market charts matter, okay? Pre-market charts matter. Okay, now, let's move to one of my favorites today. STZ. Let's go to the daily. All right. A lot of people liked STZ today. Why? Well, it's gapping under 1 green bar, 2 green bars, 3 green bars, another green bar, another green bar, another green bar, and a pivot. Right? That's a pretty potent gap. There is a lot of shock value in this gap, right? I think most people would agree. You're looking at this going, okay, anytime we're gapping under multiple green bars, these are buyers that you're taking out. You're taking out not only the buyers, but the entire pivot. And you look under this thing and you go, wow, under 156.50, there's nothing. Under 155, 156, yeah, 156. Under that, there's nothing here. Nothing. What you thinking? I'm going to short this thing. Right? That's what you're thinking. I'm going to short this thing. Now, hold on. Guys, I made $705.09 on STZ today. Going along. Okay? There's my STZ trade, 155.40 by 157.75. This is actually an add. You can see the 2 entries. I bought it at 155 and I added at 156, a little bit under that. I bought it long. And you're all sitting there going, this is a gap down. It gapped under multiple green bars. It has room to go lower. Why in the world would you ever buy this stock? This is what the novice trader says. Because it's a gap down. You're not allowed to fade a gap down under multiple green bars, right? I mean, if it's 5 red bars and then it gaps down, then you can fade it, right? Because that's a novice gap, right? Multiple red bars, and then it gaps down, and then you can buy it because that's a novice gap. But not when it gaps under green bars. What are we missing, guys? Oh, that's right. We're missing the pre-market chart. Wait for it. You ready? Now what? Now, does your opinion change? I know it changed my opinion. And I said this morning very clearly, if STZ gets under 150, perhaps we'll scalp it. But if it gets over, and I'll put it on the screen for you, if it gets over 153 to 153.50 right here, I will look to go long. Gets under 150, maybe we'll scalp it short. If it gets over 153.50, I'll look to go long. Why? This is a climactic parabolic buy setup. All of this is pre-market. See the time down here? That volume spike is basically when the market opened. Basically, right there. If you don't look at the pre-market chart, you would think I literally need my head examined to want to go long on this stock. Because again, let's go back to the daily. You're gapping under 3 green bars and under a pivot. I mean, that's some serious shock value. You're taking out a lot of buyers here. It's going to go lower. Not so fast. Not so fast. Not so fast. Wow. I mean, that's all I can say. So if you're not using pre-market charts, you're doing yourself a massive disservice. Right? If you're not using pre-market charts, you're doing yourself a massive disservice. It was a disservice to the tune of $700 on this thing today for me. Okay? Should have been a little bit more, about $800 or $900, but I got a little nervous and jittery and got out early. So I want to go back to the book real quick and show you a couple more examples. Guys, I'm showing this because this happened today in real time on a stock I traded. And this is one of the reasons I wanted to talk about pre-market charts today, because most of you don't use them. Why? Why not? Especially if they're doing ridiculous pre-market volume, which this stock was doing. Hundreds and hundreds and hundreds of thousands of shares. I may have done almost 1 million shares today. Not quite. I think it did like 600,000 or 700,000 pre-market shares. Guys, STZ usually does about 10,000 pre-market shares. Today it did 5, 6, 7, 800,000. What does that tell you? There is institutional money that is interested in this stock. Right? Volume equals commitment, or the lack thereof commitment. No volume means no commitment. High volume means commitment. There's interest in this. Your average day trader is not taking STZ for 8 million shares. Okay? Let's go back to the book real quick. Okay? Right there. Let's take a look at a couple charts. All right? Take a look at a couple charts. There's a couple specifically I want to show you. This is one okay, using the pre-market. Okay, let me see one thing real quick here. No, okay. This is very similar to the example I just gave you. You see this gap? It's gapping down. Right down to here. 50-some bucks. You could argue, maybe it's a long, maybe it's not a long, right? You could certainly make that argument. But what if you didn't look at the pre-market? What if you didn't look at this? Take a piece of paper and hide all the red bars. Okay? Take a piece of paper and hide all the red bars. That's what you get at the market open. Green, 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 green. Literally, it just takes off the open. How are you going to buy? You're just going to buy a 5-minute high, a 1-minute high? Maybe. But when you can see this, super wide range bars, super far from the declining moving average, green bar, you literally buy it over the green bar, put your stop on here. So you're in at like 56.50. You put your stop down here at like 54.50. It's $2. You go, no, it's a wide stop. First target moving average, 64 bucks. Almost a $6 move. That's almost 3 to 1. But take off the red bars, and that's all you see is green, 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 green. I'll hide it for the video. I'll hide it, right? Green, 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 green. But when you can see the pre-market red, doesn't it make this decision a lot easier? That you can visually see that it sold off parabolically pre-market, and now it's an easy, easy decision to buy this parabolic. It's an easy decision. Okay? There's another example. Do you see this right here? This red dotted line, guys? This is all pre-market. Okay? All pre-market. Pre-market, 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 pre-market. You see this green bar? That's the market open. So if I bought that, many of you go, what is wrong with you, Jared? You just literally just bought this thing off the open for no good reason. What is wrong with you? No, that's not what happened at all. I bought a base breakout. I bought a consolidation breakout. It's been consolidating, for, what is this, 2-minute chart? Well, gosh darn near almost an hour, right? 8:40 in the morning to 9:30. 50 minutes this thing has been consolidating. So I didn't buy this randomly. I didn't buy Taser randomly at 9:30 and 7 seconds. Okay? I bought it because of the consolidation breakout. Put my stop loss under here at 22.75. And boom. It's a quick, within, this is a 2-minute chart, 2, 4, 6 minutes, it's up 80 cents. It's up over 3 to 1 in 6 minutes. If you want to wait 12 minutes, it's up $1.20. Couple thousand shares of this bad boy, and there's $900 net. 1,063 net. I want you to take a look at one more thing. Entry 930. Exit. Last 100 shares, 934. 4-minute trade. 4-minute trade. 2 minutes, 4 minutes. Done. That's not bad, right? Got filled a little late. Started my order at 00 or 99 and got filled a little late. Got the majority of the shares at 23.09. Okay. Average cost on this was like 23.07, something like that. Interesting. Without the pre-market, cover it up, put a piece of paper over it, boom. Just shoots up off the open. Right? Just takes off the open. Okay? So I want you guys to think about that. Now, let's go one more example. Pretty nice gap. Not perfect because it's gapping from a green bar, but pretty nice gap for a gap fill, right? You're gapping over the green bar, over one pivot, over two pivots right here, right? Over this area, okay? And you're at least looking for this area. So what would that be, about $67 right there? You're at least looking for that gap fill as a target. It went more than that, but you're at least looking for that gap fill as a target. So basically from like 63-ish to 67-ish. It literally opened at the low of the day and just closed near the high. Okay? Now watch. You have a nice gap. You're really excited, right? You scanned all morning for this gap. You scanned all morning for this gap. And you're like, sweet. I love it. Market opens. Gone. It's gone. Just took off. Right? There it is. Immediate pop off the open. This is about the $63 mark. Immediate pop off the open. And that's what it did all day. Maybe you could argue to get in at $66, but now it's tough because we said gap fill was the target, 67. You don't have as much room left. So we went from this, wow, really nice gap, to shit, I missed it. Unless you look at the pre-market chart. Look at the pre-market consolidation here at $63. Is it not consolidating at the perfect area? The perfect area. 63 bucks. Stop down here at 62.75 area, a little bit above that area. Okay. Boom. I'm out. First 5 minutes. $1,200 trade. All right, 63.03 was the fill, out 63.38. Now, should I have probably gotten 63.50 out of this? Yes. Right, this trade was a little higher risk. You're probably looking at like a, I don't know, $700 risk. Got about 1.5 to 1 out of this thing. Should have gotten 2 to 1 for about 1,500 bucks. But look at it, and imagine if you were a patient person and you held this thing for 20, 30 minutes. My God, you could have made $3 off this. Easily. Easily. It went $7. Okay? I mean, it went to 70.09, by the way. It actually, yeah, it went $7. But if you didn't look at the pre-market, what'd you get? The answer is nothing. There's the gap. There's the 5 minute. There's the entry. Okay? Let's go back. If you didn't see this, you would have never taken this trade today. I took it for $705. Called it in the chat room, and we also talked about adding, right? Our initial trade was 155 by 152. You can see that, right? Add was high of the day, which is like 156.80, and we said raise the stop to 153.25, somewhere around there. So it ended up being about a $2 stop loss. We started with a $3 stop loss, and we added back. Okay? This doesn't look like a great trade, though, without the pre-market chart. Okay? MU. Whoops. MU doesn't look like a great trade without the pre-market chart. With the pre-market chart, looks like a no-brainer. You take the gap we talked about earlier, with the pre-market chart we talked about earlier, with the exceeding average volume, which we talked about earlier, and now you have an opportunity to get in this thing at 9:30, 9:31 in the morning and make some serious money in 10 minutes. So for those of you out there that watch me trade in the chat room or on YouTube, etc., and so forth, and you go, wow, why are you taking stuff at 9:32, 9:31, 9:30? I never take something unless it has a great pre-market chart. I never take something that early unless it has a great pre-market chart, right? So keep that in mind. Now, remember, these fail too sometimes, okay? These fail too sometimes. Well, here's the thing. Somebody the question is, how do you account for slippage when entering on the pre-market? There's two thought process here, Sabir. Notice in all of the examples I just gave you, I did not actually enter in the pre-market. I entered as soon as the market opened. There's a difference. I do enter in the pre-market, right? I will. But here's how you mitigate risk. You nibble. You nibble. You nibble. So if it's pre-market, okay, and you go, wow, I really like this stock, you might say, 35, 10-ish, I'm going to take maybe a quarter lot, a third of a lot, and I'm going to give it all the room in the world down here. All the room. When the market opens, I'll add the rest back to it. Now, occasionally, right, they just rip and they don't give you that opportunity. Sometimes they actually end up going in the pre-market, right? Sometimes, and you know what's a good example of that? I think it was SGH today. I wanted SGH under $26. See that right there on SGH, guys? This is pre-market, pre-market, pre-market. It's actually post-market. Post-market, pre-market, pre-market, right? See the bottoming tail? See this consolidation at 26? I really liked it. It was right around 8:40 in the morning this morning. And I chose, I said, I'm going to wait just a little bit. Well, waiting was expensive, wasn't it? Because then the best entry we could have gotten was 24. And 24 would have worked, but it's $2 later. So you have to make a decision how early you're comfortable getting into this. And at 8:40 was a little bit early for me. That was a little bit early. Okay, so what you want to do if you're actually taking it in the pre-market before 9:30, take a third of a position. So if you're going to buy 1,000 shares, take 300. It gives you wiggle room. And then when it hits your entry after the market opens, add the other 700 shares back. Typically, we're going to give them slightly wider stop losses if we're buying it at 9:30, 9:31, 9:32, right? Why? Because stocks tend to be spreadier and whippier off the open, right? That's what tends to happen, okay? Baidu was another example. Baidu was an example of choppiness, but this was a really nice, here, let me take the pre-market off for a second. This is an example of a really nice 60-minute chart. See this Baidu over here, guys, at 165? Right there. We talked about it all morning today. Wow, what a beautiful gap. 155 to 165, gaps up. So then I move down to the 5. That's how choppy Baidu was off the open. Why? Because the market was choppy today. Bottoming tail, topping tail, bottoming tail, moved up, pulled back, gave a buy setup, double bottom retest, and now it's finally going. Well, I took this trade twice today and I lost $374 on it after taking it twice. Okay? But why did we like it so much? Wait for it. The pre-market chart. So this is an example of why you have to give them extra room and then try to add back. Now, in this case, it tagged you and it tagged me. That's where I lost my $374. I got in at 167. I got in there. I took some pre-market and then I added back at 167 and I got full. And my stop loss was 166.75, or sorry, 165.75. What did it do? It went to 165.50, 165.48, came back up, did it again, came back up. What did we do? We got back in it. We got back in it and it moved higher and then pulled back, moved higher, pulled back, and I got out at break even because it really didn't look good. Now, I might be wrong. This might work later. The target was 170. So the first trade stopped out and the second trade was break even for me. But the second trade is actually a decent double bottom retest. That's a topic for a different time. But here's a great example of a pre-market chart on Baidu not working. Stopped me out. Doesn't mean I'm not going to take it. Guys, no trade works every single time, but by using the pre-market, you have a much higher likelihood it's going to work. You're going to get a better entry earlier in the day, and if you're right, it's probably going to work in 5 or 10 minutes, okay? But the one today I really wanted to show you guys was that STZ because it's such a beautiful chart. Most people would have never, ever imagined or considered buying this stock today. They would have only thought perhaps about going short because of the gap. Boom, $700 later, okay? So, I hope you guys enjoyed this lesson on pre-market charts. I didn't go as in detail as I would when teaching PTS. This chapter is one of my favorite chapters in that book, so if you haven't taken PTS, you should check it out. But think about, or at least start looking at pre-market charts. You don't have to start necessarily using them. And when I'm talking about pre-market, guys, I'm not always talking about getting in at 925 or 920 or 915. I'm talking about using the pre-market chart, but still entering at 930 to 940 to 950, 10 o'clock. But use the pre-market chart as your guideline. And the other thing that the pre-market chart is good for, which I didn't talk about, is knowing where the high and the low is. Sometimes a trade will stop in a certain area and you'll go, there's nothing there, there's nothing there. Well, there's a pre-market high there. You just didn't see it because you didn't look at the pre-market chart, right? Because you didn't look at the pre-market chart, okay? So just keep that in mind, guys, all right, when you're doing that. Now, guys, this is how I'm able to make 500 grand a year because of this stuff, guys. I'm able to make 500 grand a year because I'm smart and use pre-market charts and I don't rush into stuff without having adequate confirmation. So I hope you guys learned a little bit there, all right? And I hope that you will start to consider, think about using pre-market charts. Start studying them a little bit. And then after a few weeks, a couple months, start using them perhaps as entry points. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.